Welcome back to the program. I'm Zev Brenner. Actually, welcome to Leumi Financial Corner. With us once again, Michael Zaremski, head of U.S. Private Banking, Bank Leumi USA, member of the Investment Committee for Leumi Investment Services. Michael, good to have you back again.
Great to be back, Zev. Always a pleasure talking to you.
So, one thing, when I watch the news or read the market reports, I keep saying Michael was right, because there was a 5-day streak where the stock market went back, where it was pre-COVID days, where whatever losses it had was wiped up. And you keep saying, you were the optimistic one, saying no, even though it was just temporary, the markets are going to be rebounding. We're back on track, because it's different than 2008 and other crises. It's a much different scenario. And I have to say, Michael, I know we discussed it briefly the other time, but you are right. You're correct.
Well, it's nice to be correct, and I think in large part we were correct at Leumi because we've really been focused on trying to look at the forward-looking fundamental picture on what's happening. And I think one of the challenges and one of the problems that happens quite a bit is many people are always reliant on past data. People are trying to analyze what happened last time, how did it react last time, what does the data from last time mean? And as you and I have spoken, over the last few months or so, we are in a very different time. And I think a lot of that is because of the digital age, the information age that we're in, and the type of crisis that we've had this time is very different than the type of crisis that we've had last time. So instead of worrying about mean reversion and what technical analysis looks like and what all the backward-looking data looks like, I think it's been very important to look forward and try to make an assessment on, what is the reaction going to be from the government to help create a bridge loan? How will that translate into the economy? And if we were to go back and think about how bad everything was back in April, and then you think about how much reaction there has been, particularly from the government, and I think we've gone through some of these numbers before, but $2.5 trillion of fiscal stimulus, and then a balance sheet that has exploded out from $3 trillion at the Fed level up to about $7 trillion as we speak today, and many people believe it'll go up to about 10 to 12 trillion. All of that is basically designed to provide a bridge loan to the economy to help support us through. And, the PPP program was a big part of that as well, which, Leumi was very proud and happy to be a participant in. And as we're seeing those impacts filter through, we're also seeing economic activity pick up in different levels in different ways across the different regions and different states. And again, there's a battle that people are going to decide is the economy ahead of the market, or is the market ahead of the economy?
So with the rebound, where do we go from here? What's the prognosis?
Well, that's a very good question. I think that's a big part of what our internal thoughts are at the bank. And again, just to be clear, the views that I'm expressing on the call are my views, not necessarily those of the bank. But as we do start to look forward, one of the things that we are starting to see is a broadening out of the recovery. Originally, the recovery was predominantly NASDAQ technology, as well as essentiality with food and banking and things like that. But now more and more what we're starting to see is some life being breathed into other elements of the economy, particularly those that have been hit the hardest. You see some data, and again, data is so fascinating at this point. You see an airline stock is up 12%, and it looks like a huge number, but the base is just so low after kind of an 80 or 90% collapse. Same thing when you look at some of the data coming out of the airports. The amount of people traveling in the airports is, going up at a pretty significant rate on a week-by-week or day-by-day basis. However, the base is so incredibly low when you compare it year over year to last year. But it's always important to remember that the big part of the market pullback was based on what I would consider to be worst-case scenarios. And now what we're seeing is as people are starting to return back to travel, to hospitality, to eating at restaurants, we're starting to see a broadening out of that recovery. It's nice, based on Long Island, Phase 2 is starting to happen this week, so there can be the potential for outdoor restaurants, which I'm very excited about. But I think what you're seeing broadly across the country is not every place has been impacted in the same manner that New York has. So when you see people in other places of the country, they're actually dining in restaurants without masks and trying to get back to living a normal life. Again, it's because they've never really had the issues to the degree that we've had them here. I would also say that one of the things that I'm really trying to follow closely as we continue to see whether or not the virus and the pandemic has dissipated is tracking kind of the hospitalizations and deaths and death rates. There's a lot of noise around the new cases, and one of the reasons why we're seeing new cases is that new cases are very closely tied to increased testing. The other point is there may be a lot of people that do test positive, but if they're not really impacting the hospital system and they're not really impacting the healthcare system, in a lot of cases for a lot of people that do test positive, they have very mild symptoms. So when we look at the national data right now, deaths that are being related to COVID virus are somewhere in the neighborhood of 1,000 per day across the nation, and hospitalizations are tracking somewhere around 1,500 per day across the nation. So again, these are not great numbers in the sense of we don't want to see anybody sick and anybody dying, but when you think about a nation of 330 million or so people, these numbers are much more manageable for the United States healthcare system. And when you look at a state-by-state or regional basis, again, most of the numbers are becoming far more manageable.
I was just curious, do the protests, the demonstrations have any impact at all on the economy or on the stock market?
Well, it's interesting that you asked that question because I can look at it in a couple of different manners. From my standpoint, in terms of the pandemic, what I think is interesting with the protests is you've seen a lot of people put together in very tight quarters, not necessarily social distancing, and these protests have been going on for, the better part of almost 2 weeks. Similarly, there was a lot of protests going on before that where people were protesting the lockdowns, and regardless of what type of protest they've been, again, we've had people out on the streets for, quite some time, and in any of those places we have not seen significant rises in virus, in hospitalizations, and death rates. So from that standpoint, I think the protests have been a window into what the world will look like post-lockdown. In terms of some of the other elements of the social unrest, I think that these are some of the issues and problems that are impacting the country that we need to be speaking about, and I'll leave it to others who are more involved in the social aspects of it to discuss what the right solutions are for those problems that are impacting the nation right now.
So things are upbeat, and you have that perspective. So we thank you for being with us once again. Michael Zaremski, head of U.S. Private Banking, Bank Leumi USA, member of the Investment Committee for Leumi Investment Services. Michael, thank you. Look forward to speaking with you again.
Thank you very much, Zev. Always a pleasure, and all the best.
And we're going to be right back.